I hope you know I don't want to do this. Currently studying for exams right now. Midterms, call them exams, whatever. Doesn't give a shit. I don't like doing that. So I would rather be here doing this video in trading than studying. But guess what? I'm a fucking junior and I need to study. I'm also in the middle of an episode of my season. I don't really want to do this, but I kind of have to. Because I guess that's my destiny. That's right, that's my destiny. All right, let's talk serious. Today. What happened today? What happened today and what happened yesterday that made today so important? Well, breaking news, today wasn't so important. Wasn't the best day, wasn't the worst day, but if you want to look at price action for a second here, please do notice that we have reached inside a daily order block, which we have marked out here in red, as you can obviously tell. Priced almost hit the consequent encroachment of that order block, then got sold off, traded all the way back down to the current range that we're trading in for Thursday, and then Thursday open. I will let you know that we had news today, all day. OPEC OPEC JMMC meetings. Now you can read what this says, but this is important for oil. Then for U.S. currencies, you also had core PC prices index monthly. Not a huge slippage, because this was the forecast, and not a big slippage for unemployment claims because the forecast was 219 and the actual was 218. So only a $1,000 difference. Not a lot. Not a big impact. So is that still newsworthy? Yeah, I mean you shouldn't trade that. But I'll tell you what happened, because today was a pretty eventful day, and I waited I waited the whole day to take this trade and did not end up taking the trade because it went around and violated one of my most crucial rules, and that is to trade before the closing of the stock market and not 10 minutes before, or an hour. So can't trade between, I would say, and I want to say from 2:30 to 4. That's 2:30 is like my latest deadline. If I see a really good trade, I'll take it, but that's after that it's done. So, as you can probably tell, I love standard deviation, and I'm working on it because I have to refine my skill on how to do it a little bit more and how to get better at it. Please do notice we had this what was this? Was this daily? Is this a daily fair? No, it was not a daily fair value gap. Was it a 4-hour fair value gap? No, it was a 4-hour order block right here. All of this impulsive move up. 4-hour order block here marked out. Okay. In that 4-hour order block, we also had a more precise 1-hour order block that you could also have marked out right here. Okay. Now, with that being said, we don't have to remove this, but I'm just going to keep that there. With this being said, please do also notice that we had the London lows, London highs, Asian lows, and Asian highs being created like every other day. Unsure why the true open. Okay, the true open's there. Okay, so New York true open is up here. Today I actually was watching this quarterly theory happen live, and well, I didn't trade. I didn't trade because not every day is a trade opportunity. And the strategy I focus on did not show any signals, or price did not set up in a way where I knew what was going to happen and that my strategy could have worked. It only happened right before close. What I would like to do is see something like maybe before or after 10, but 10, right, is here. If you just look at this price action down here, not a good trade. And I'll tell you why I was waiting for a buyback. So I wish I could go replay mode because that really would have helped. 5 minutes is probably the best time frame to explain this, and you'll understand why I didn't trade during that time. So I'm not going to point to anything, but I hope you can follow. As I just marked in gray, that is the 4-hour order block. Before all of this consolidation happened, we were up here, right? 9. Pretty sure 8:30 is up here. So 8:30 we get our news. Okay, so the news that was right here, that gets released on this candle. What does that create? That creates the New York high right here, and then we start dumping, selling. Okay, and I want you to notice, do I have anything marked up here? No. I don't have any higher time frame PD arrays because when I look back, there was nothing up here. This is not a high time frame PD array. High time frame PD array is a daily PD array. Was there anything there? It's all in the wick. So there was nothing for me to look towards to, and there was nothing for me to see a rejection off to. So there was no reason for me to trade this because this was not even near the open. And so this is typical play. You have engineered liquidity with London here, and starts dumping. This is 9:30 open, so this is right before 9:20. We're coming down on 9:20, and 9:30 we open. Get the volatile move. Notice how price did not come up to this New York true open, but it just started selling. Did not trade, just watched. And I watched this take out London lows and then trade lower until it hit this 4-hour order block, consequent encroachment. It didn't trade lower. It traded to the consequent encroachment and then closed above. Had a bullish buyback. And this is where I was looking for shorts. But then I told myself that there was, actually, no, my bad. I was not looking for shorts. I was looking for buys, right? So at first, my strategy would have been I wanted a market structure shift above this high. I wanted price to close above this high. I'm going to make it really thick just so you see, right? Does price close above these highs? Here it doesn't, here it doesn't, here it doesn't, here it doesn't, here it doesn't. The only time it does is up here. But by the time we get there, we've already made a new high up here. So now the market structure shift would be validated if price came up here and closed up here. So does that make it a bullish market structure shift? Nope. So what does that tell me? What does that tell the trader? That tells me that we're going down again. We're ready to come down even more. Now, the real target here was obviously the bottom of this 4-hour order block because we've already traded down to consequent encroachment. I know that's the New York lows that was traded there, so that's obviously our target. If we can get down here, we can get down to the bottom. We didn't get quite there, so price wanted to push even more and target that. I want you to watch this price action up here, though. Notice how we marked out that 1-hour order block off this 4-hour order block. Price comes down right almost there, then trades right through it, almost to the consequent encroachment of that 1 hour. So what does it want to do? Go straight through it. So then we have this choppiness, right? We have this back and forth, until we see a reversal, doji candle, right on the bottom. Good price action, good support level. Starts pumping. Now I don't like to say pumping, but it starts getting bought back up. And this is where I'm kind of watching. I'm like watching what's going to happen. And if you notice, right, we're currently in like a big downtrend, right? So for this, in my mind, for me to go long, because I had a bullish bias today, and I was waiting for some areas here to hit, because this is in my mind, it's not a higher time frame PD array, but this over here, I should know too, is that this right here was not manipulation. Sure, it traded above this accumulation right here, and then this was treated as manipulation, and then this right here could be continuation / distribution. Fine, you could mark that as that. That's understandable. That's completely tradable. I could have taken a trade here, but my strategy didn't alert me, or I was not alerted of a higher time frame PD array. Now, I'm pretty sure if I look back in my notes, which I don't have here, but I know I have it noted down somewhere. I do have it here. I can tell you that the quarterly theory cheat sheet is if you're trading on the 1 minute, you should have a 1 hour PD array. Not always a daily. So I made a mistake. And so that hourly PD array to me would have been that liquidity up here, which it did not reach. So there was nothing for me. As you can see here, there's maybe this order block here. Could have been something interesting to mark out, but I just didn't have it marked out. Let's see what happens on the 5 minute. Okay. Yeah, I mean, okay, fine. Yeah, okay. So I'll be honest, I missed a trade. I completely missed a trade. This would have been a nice trade to take and nice to go short. And you just saw my mistake right here. I could have gone short. I could have had a perfect entry. But guess what? You're wrong. What time is this? It's 8:45. Market's not open. That's a good play. If market was open. Market opened down here, not up here. So while this is tradable for others, I don't trade this. I can't. I trade this down here. This didn't show any opportunities of that. The manipulation already happened. So I knew that we were already in distribution, quite literally already in the distribution phase, which means that I can't trade the last leg of it. That's how you lose money. And if I was entered short here, I would have lost money because it came back to my stop loss. It would have, came back down. The only take profit would be down here, and that's a lot of drawdown. Not a place you want to be. So I waited, right? Now, like I talked about with the trend, right? Big trend. So for me to see a market structure shift, I want to see the when you're trading live like this, that the nearest high I wanted to see broken was this one up here, right? Because this one was higher than this high. So high, right? Lower high, lower low, higher high, but it didn't close. So that's the new higher high that I'm looking for, something to trade above and close, right? Yes, we made a high here, but that's a break of structure, like internal, right? This is the most external that I'm looking to. So if price closes above this, then I consider this a valid market structure shift. And as you can see, had a reaction off these two 4-hour order blocks, and I want you to note this price action right here. And so my first thought was, let's draw a standard deviation on, where did I draw this? On the low, on the swing low, or on the swing high here, that ultimately created the swing low. Actually, this probably should be up here, no? Because this swing low, because this is also the swing low. How does this look on here, though? Yeah, it looks about right, because this is... Doesn't this line up, like, perfectly, though? Yeah, I chose this swing low. I don't know. Hold on. Why did I choose this one? Because this is the market structure shift swing high. And this is the swing low. But this is the higher swing low. So it should be something like this. Again, I'm still working on it. This is kind of choppy for me. It's choppy area. So standard deviation there. Then we trade up. I watched this live, right? This was 2. This was basically like a free period. Watch this live. And then my strategy teaches that after a market structure shift, you want to have drawn like your OTE. And then that's where price would want to come back and want to trade back into. Now, do notice that there is there's 3 visible fair value gaps. And there's one that stands out and 2 others that are like kind of hard to miss, maybe one missed for an entry. And this is where it gets tricky because I don't know this yet. And I got tricked. Because the first time I did this was, here's the leg up. Here's the whole move is this, right? Here's the leg where market structure shift happened. So in this leg, where's the swing low and where's the swing high? It's this swing low to this swing high. So I would draw my fib, which is ultimately my OT, drag it out and make it like this. Okay? So that's the OT of that range right there. Okay? Now, of that range, if I were to buy, let me just do this. I'll change it. Give me a second. To discount premium. Where's the range that I can start buying? Right here. Anything under here. Okay, in the OT zone. Note that there is also 2 fair value gaps in the zone, in the discount, right? So in from this zone right here, I'll drag it over here. There's 2 fair value gaps. Can you note? One here. No, there's a lot of drawings, my bad. One right here, which is on the golden line. And then the second is right here. Right? Now you don't worry about this one because this one's not near the golden zone. This one's the only fair value gap that we had on the golden zone. Okay? And then what happens? So you're worrying about this candle, but I was worrying about this one. Because in my strategy, that's how the strategy works. You go and you find the fair value gap here. And I was wrong in this, but then now I'm showing you what you could have done and what was right to do. And I was not paying enough attention. But when I saw the swing high be created, I drew the OT. And I realized the OT is down here. So if price really wanted to do like my strategy teaches, or what I've learned, it would have came down here. It would have entered this area of discount. So why would I buy here? Because note, at the time I saw this fair value gap right here. I'm like, oh, it's going to come back down, hit this fair value gap and bounce off, which it did, but it didn't because we're in the premium. So we're not supposed to be buying here, right? We're not supposed to, yes, it's buying here, but we're not supposed to be entering a trade in this range, right? So then you ask yourself, what the heck? I got this wrong. Stop loss, under here, whatever. Like it took me out. In both ways, it took me out. So that was the first mistake I did. But then when you let it play out and you realize you're wrong, you're like, the OT is down here, price needs to come back down here. Then I drew a second OT because then the range got bigger. The swing high got taken out. So then you agree that this swing low is still valid, but then the OT moves up here. Okay. Now notice something. If we draw another OT and we combine them, look at where the golden zone is. Creates a perfect box of where that is. Now I will delete the second one here and we'll keep the big range up. And now if we put this all the way up here, keep that there, the discount is now here. So now if you were to take an entry, it's more broadly taken into consideration that we're now, everything here is in discount. So the whole OT is in discount. This fair value gap down here is in discount. And if price really wanted to go further, it can, and we could buy it. And that's where you watch price action. You watch how price reacts. It trades all the way down, gets bought up because it hits a fair value gap right under that golden zone, sweeps that 4-hour fair value gap, which has already been traded through. So, added liquidity, if you will, sweeps this little tiny intraday fair value gap here too, in this golden zone too, and pushes back off. Right? With your standard deviation, you could have taken a trade here And again, like I said, the target is the 2.52 area, right? Either consequent encroachment or full area. Now, do notice we got close, but we're in there. So far, my strategy teaches to go in the middle, but it also teaches that if you drag this out, what do we notice? Let me change it to gray because you guys probably can't see. In the zone that we're targeting, is there any resting liquidity or PD arrays? Yes, there is. You know why I targeted consequent encroachment? Because there's PD arrays here. If the PD arrays and liquidities was up here, if this candle was up here, I would have targeted full, right? Now price went higher, but I got out earlier. Notice how I didn't tap into it because there's no liquidity up here, right? There's some up here, but this is I guess you could drag this out all the way if you really want. In the zone, what are the resting liquidities? It's this one that's the most current one, right? There is some up here, which it did try to grab, but to me it's safer to just focus on this because this is the current New York. Again, this is New York high liquidity. That's liquidity. That's good. That's what you're aiming for. So standard deviation help there. Now for an entry, this is a little more risky because if you look at the 3 minute, the 5 minute was there, the price action was there, but the 3 minute is a little more risky. Where would you enter on a trade? Now, personally, I hate to go to the 1 minute, but sometimes you have to look at every time frame and you really have to note where everything is, right? We get this down candle, hits this fair value gap, okay, which is also in this tiny 1 minute fair value gap here too, okay, almost hit the consequent encroachment. We reject right off, phew, and then what shows bullish engulfment candles is that we close above this high right here. We almost close above this high. Actually, I'm pretty sure we close. What was the high of this? 45.6. What was the high of this? 45.6. We close at the same level. Okay. Next candle, we close at the same level. No. This one, it's open was there. And then this candle we close above. But that's the high here. So then you're just trading highs. So then the real, oh, let me make a move here would be this. Right, this high gets broken into. Okay, and then this is where you'd be a little more due diligence, I guess. What does that create? Obviously, that creates a fair value gap here. Let me make this like a red. Oh, we're on the 1 minute. Shit. And then it took off. It took off. Personally, what I would have done in this situation is you would have hopefully recognized that there is a bearish fair value gap right here. So we can delete this for a second. And I would want to see if price violates this fair value gap or does it respect it. And then off this fair value gap, I can take an inversion fair value gap trade. So maybe the 5 minute isn't the best option for this. Maybe that's why I went to the 3 minute and 1 minute just to see. Trade up, hit this fair value gap, trade up even more, trade out of it, don't close out of it, and then the next candle is where I see, okay, this is where we can go. And so on the 1 minute, I want to see a close above that, and then a re-entry off of it. So we close right here above this fair value gap, we come down, and then your entry should have been, again, very risky, could have been right here. And your stop loss would have been this black bar down here. And then you take profit because you're accumulating. Your first take profit should be in these highs, right? Those should be, or actually first take profit is this. Okay, this way you secure the 2.1 risk reward. Then it's this. And then if you really want a runner, you leave it consequent encroachment of the trade. Now, I got to work on my entries a little bit because as you notice, we are in the fine line of the discount area. Okay, so you would have, and this is what I watched live with the discount, is that candle on the 1 minute. See this candle's close? It's so important because it closed above this 5-minute fair value gap, which shows that it wants to break out, which shows that it definitely wants to break out. And because it closed above it, and then we saw a move down, this is where you would have entered. Because if price closed down here, closed below these lows and below this, then that's like a pure rejection, and my analysis was wrong. But I trusted my guts, had a stop loss, had a mental stop loss. Because if we went higher, a little bit higher, like if I entered off this candle's up here, it would have been a good entry, but it wasn't like it would have been like a entry with a good stop loss. Because if I entered up here, right, on this candle, like here, and my stop was like the consequent encroachment, I would have gotten taken out. Even if it was this, it's still risky, right? So this entry was better on the consequent encroachment here, with in my opinion less risk to get taken out. And again, this comes with watching the markets every day, taking notes on these kind of moves. Again, today was weird. There was news. It was volatile. And to be honest, any regular trader would not expect a move this big after such a move down, right? But when you're experienced enough to notice that there's consolidation, then we're acting weird around these areas right here. And then we start going up, break all these highs, structure shift, come back down, hit the OTE, have a good 5-minute indication of some kind of reversal. You know what's going to happen next. It's at least going to take out that high. It's at least going to take out this high. And then that's when you draw your standard deviation. Consequent encroachment of this, New York highs. It has time because this is what? It's 3:35. And this candle, I'm pretty sure, closed 5 minutes before market closed. So this was like last resort. That's why like this is literally the riskiest trade, but it like, you know what I mean? It's very risky to trade because if this like got liquidity here, that just would have been break even and just come back down and just took me out. So does this happen every day? Nope. Will this happen tomorrow? I don't know. Couldn't tell you. Gotta do the analysis. What's a good tip for you if you're still watching this video? First of all, go study for your exams. And the second tip is to watch everything. And I mean it. Watch and watch and learn. Keep watching. And the most important thing is apply it to the charts. You might learn a few things, but if you don't know how to apply them to your charts and you don't know how to recognize it, it is useless. I didn't know what standard deviation was 4 weeks ago. Next thing you know, I'm using it to take trades. Use it in your charts. The more mistakes, the better, because you learn from those mistakes. If you can't learn from those mistakes, get off the charts and do something else. Have a good night.